Good morning, everyone. Again, I'm Africa Robinson. I am the ICB administrator. For today's overview of the, Informal Conference Board, I'm joined by two conferees, Phil Bolander and Chad Estes. Next slide, please. What is the Informal Conference Board? So the Informal Conference Board is a division of the Department of Revenue that reviews proposed adjustments to audits. Once audit has completed their assessment and issue a notice of the taxpayer, if you are afforded the right to request a review of any disputed proposed audit adjustments, the notice that you receive from audit will explain how you exercise that right. The review is conducted by the Informal Conference Board conferees, whose purpose is to work with the taxpayer and audit to ensure the disputed proposed adjustments are accurate. The final determination is made by ICB board members. Next slide. I'm sorry, next slide. Thank you. The ICB is an independent division which is separate from the Audit Bureau. Once the ICB has accepted jurisdiction over a matter, the audit is no longer with the Audit Bureau. So inquiries about the audit should come directly to ICB, and that can be done through our email, which is rev.icb@illinois.gov, or by contacting the assigned conferee. Even though ICB is an independent division, conferees do work with the Audit Bureau and legal services to understand and ensure the accuracy of the audit. The board that approves the final disposition of the case also has representation from the Audit Bureau and legal services. Next slide, please. The ICB has an administrator, which is myself, two boards, conferees, and an office assistant. The two boards consist of a primary board and a secondary board, distinguished by liability amounts. The primary board hears cases with a liability amount greater than $1 million, and the secondary board hears cases with a liability amount of $1 million or less. Next slide, please. Both boards have members from the Audit Bureau, Legal Services, and Board of Appeals. This configuration helps facilitate a robust discussion and review of disputed adjustments. Board members have extensive background experience in their respective fields. The names of each of the board members and the respective division and program areas is listed on the slide before you. Next slide, please. A lot of what I've discussed so far and what will be shared during this presentation can be found in the two citations on the slide. In addition to that, PIO 58 provides a brief description of the ICB process and what taxpayers can expect when they request review. PIO 58 is often provided to taxpayers and is also available on our website at tax.illinois.gov. Next slide, please. I've explained what the Informal Conference Board is and some of the who. I'll give you a little more details. Again, I'm the administrator and I'm responsible for moving cases through the review process, from accepting jurisdiction to issuing the action decision. But the gears that really keep our operation going are our ICB conferees and our office assistant. We have 3 income tax conferees and 4 sales use tax conferees. Their primary offices are in Chicago and Springfield, and they do travel. Next slide, please. The role of the conferees. Cases are assigned to a conferee on a first in, first out basis, with the oldest cases being reviewed first. A conferee's first order of business after a case is assigned is to make contact with the taxpayer within the first week of assignment. This often happens the same day that the case is assigned. After a thorough review of the disputed issues, conferees are responsible for preparing a recommendation for board consideration. Conferees remain active with the case until an action decision has been issued. Once the board has agreed on a position and an action decision has been issued, the ICB review process is complete. Next slide, please. Not all audits come to ICB or get ICB rights. Only those that result in additional tax due, a loss reduction, or a credit claim denial. Again, if you have ICB rights, the notice you receive from audit will spell that out to you. Next slide, please. The first opportunity you'll have to file for a request for review is when you receive one of the notices listed on the screen, the slide in front of you. ICB rights are afforded with a notice of proposed audit results. A final notice of audit results does not afford ICB rights. If you've received a final notice, then you've missed any opportunity to request review by the Informal Conference Board. So it's very important that you read the audit notice carefully. Additionally, the notice provides information that you'll need to complete your ICB-1, which is a request for review. Sometimes we see requests for review for periods not covered in the notice. ICB cannot address periods outside of its jurisdiction. Next slide, please. The notice you receive from audit will provide that you have 60 calendar days to request ICB review. It's 60 calendar days and not 2 months, which is a common error taxpayers make. The only wiggle room allowed when it comes to calculating the 60-day filing period is when the 60th day falls on a holiday or weekend. Then the date moves to the next business day. My recommendation to taxpayers is to submit your ICB-1 request as soon as you're able to, as to not miss the deadline. You can always withdraw the petition if you don't want to proceed through the ICB process. However, once the 60-day deadline has passed, there are no exceptions that allow for ICB to accept jurisdiction over a matter. Be mindful when you're calculating the 60-day window, as taxpayers have missed the day by a single day. The postmark date and the date of the letter should be your starting point to calculate the 60-day filing period. Next slide, please. So if you don't receive a notice providing for ICB rights, then a few things may be occurring. When you receive your audit notice, an ICB waiver will be included. If you sign this waiver, you are foregoing your right to request review by the Informal Conference Board. Also, if you make a partial payment, only the unagreed remaining tax liability can be disputed and reviewed by ICB. A full payment of the tax liability equals agreement with the audit. If there are no disputed issues, then there's no issue to review. So payment equals agreement, and you will not receive ICB rights. Lastly, if there are less than 180 days remaining on the statute of limitations and the taxpayer declines to extend the statute, then ICB rights will not be afforded. Next slide. Once you've decided you want to file for a request for review, you'll need to complete and submit Form ICB-1. The best method for submission is via email at rev.icb@illinois.gov. You can also mail in your submission. Only one method is necessary. You don't have to do both. Email is preferred, and taxpayers will get a faster response if they email their ICB-1 petition. The ICB will not get processed until it is completed correctly. Taxpayers are given a reasonable amount of time to cure any defects with their submission. However, if a taxpayer is non-responsive to our request to correct their ICB-1, they will receive a rejection letter. Taxpayers are afforded additional time to submit supplemental information, so don't feel the need to wait to submit your ICB-1 until you have everything ready. Again, there are no exceptions or extensions allowed for the 60-day filing period. Some taxpayers elect to submit an ICB-2, which is an offer in disposition, also referred to as settlement offer, along with their ICB-1. The decision is up to the taxpayer as to when to submit an ICB-2. A submission can happen up until the day an action decision is issued. If the taxpayer elects to have a representative, the ICB-1 provides for when an Illinois 2848, which is a power of attorney, is needed. The Illinois 2848 should be submitted directly to rev.poa@illinois.gov for faster processing. ICB does not process Illinois 2848s, but merely forwards it to the address that I provided to you. Next slide, please. Once the ICB form is received, it will be reviewed to determine if ICB can take jurisdiction over the matter. If the ICB form is timely received and filled out correctly, you will receive written verification that the ICB has accepted jurisdiction over your case. If we reject jurisdiction, you will receive a notice and an explanation. Rejections usually occur because the ICB was not received timely, there isn't a valid basis for the request, or there isn't an associated audit with ICB rights. A little more on the basis of requests for review. A taxpayer cannot merely state that they disagree with the audit. The petition must be specific and state the basis for the disagreement, why you disagree, and support for your position. Additionally, the ICB is not the proper forum to make constitutional arguments. If the sole basis of your request for review is challenging the constitutionality of the law, we will not accept jurisdiction. Additionally, the ICB will not hold cases in abeyance nor make a decision on a case that is pending in litigation with the same or similar issue involving the same taxpayer. Next slide, please. Our review scope is limited. Conferees will not conduct or redo an audit. The only issues a conferee will review are the issues raised by the taxpayer. For example, if a taxpayer receives a notice that has a tax liability, penalty, and interest, if the ICB-1 petition does not request abatement of penalties and provide a reasonable cause argument, the recommendation in the action decision will not address it. ICB does not address interest issues. Again, the only issues that can be addressed by ICB are penalty and the tax liability. And thus, a specific request for review must be made for both. Occasionally, we'll have taxpayers express hardship issues. The ICB is not the proper forum for hardship cases. The taxpayer would need to appeal to the Board of Appeals. Next slide. Now, a little bit about the when as it relates to ICB. When the review process is completed, a recommendation is provided to the board for review and signatures. Only 2 board member signatures are required to prove an action decision. An action decision is a summary of the recommendation with instructions to audit, which could provide for changes in whole, in part, or none at all. Once audit receives a copy of the action decision, they will prepare to close the audit. The action decision does not establish legal precedents, and as of last month, the average age of a case in ICB is 198 days, which is an improvement from the last time I gave this presentation, which was a year ago. We've had new hires that have really helped address our backlog issue. Next slide, please. A few things I'd like to just reiterate. The ICB-1 must explain with specificity the issue and dispute, why the taxpayer disagrees, and support for their position. Merely stating that you disagree or audit is wrong is not sufficient. Also, an explanation alone without credible books and records is insufficient to overcome audit's assessment. Also, don't underestimate the use of the ICB-2, which is settlement offer. It is becoming a common tool to help resolve disputes. And again, you can provide that ICB-2 with your submission or anytime before the action decision is issued. In situations where a taxpayer, lastly, it is uncommon for a taxpayer to see an increase in a liability once the matter is in ICB. However, in situations where a taxpayer's books and records were requested during the audit and not provided until the ICB process, that new information can be reviewed by audit and result in additional adjustments. One of the best ways for taxpayers to assist in the ICB review process is to adequately respond to requests for books and records from audit. That concludes my presentation. I will now turn it over to Phil Bolander, who is, again, a conferee in the sales and use tax field and will speak on his experience as it relates to handling cases for ICB. Phil?
Thank you, Africa. Good morning. As Africa said, my name is Phil Bolander, and I am a sales and miscellaneous tax conferee for the Informal Conference Board. I started with the Department of Revenue in 1976, and I was an auditor for my first 6 years before I became an audit supervisor for the next 19 years. And I basically finished my career started with ICB January of 2002 until I retired in the end of 2020. But after a year or so, I was invited back as a contract employee, and I've been here for a couple of years under that under those contracts. As stated by Africa, the Informal Conference Board goal is to address and resolve liabilities, if possible, that are proposed by the Audit Bureau. Regarding the sales and miscellaneous taxes, we address a variety of issues where some are unique and others are more frequent in specific business sectors. I'm going to address 4 of the most frequent issues that have come before the board. The first issue is probably one of the smallest per dollar exceptions, but highest in number of cases. This issue involves the farm machinery and equipment exemption. The biggest majority of items that we're seeing that are causing problems are the ATVs, the all-terrain vehicles, and the UTVs, utility terrain vehicles, where purchasers claim the exemption. There is a misunderstanding that being a farmer and using it on the farm is all that is required to qualify for the exemption. Purchasers must use the ATV or UTV in production agriculture in a qualifying manner prescribed in the regulations covering this exemption. There are specific activities defined by the regulations that qualify and do not qualify. Just an example of qualifying uses are applying farm chemicals and transporting seeds to the field. Examples of non-qualifying uses are mowing and checking fences. Moving on to the next issue, which is the 1099-K audits. These types of cases involve mostly cash businesses such as restaurants and bars. When records are not made available to the auditor or are insufficient to perform an audit, the auditor will utilize a procedure whereby they obtain the 1099-K data issued from credit card and debit card processors. This data provides the amount of charges made by their customers using credit and debit cards to purchase products from the retailer. These amounts are increased by a factor that incorporates cash sales. This cash sales factor is computed by the department by taking data filed on returns from a similar group of taxpayers to arrive at a cash factor for that group. The computed receipts are then subject to tax less any proven non-taxable items such as tax collected from customers, tips, and exempt sales. My third area has been touched on a little bit, but that it is the cases that resulted from the Wayfair court decision. The audit period start in October of 2018, and this court decision allowed states to subject taxpayers without a physical presence in the state to tax the sale of products where sufficient economic presence, such as sales activity, is present. Retailers who sell 100,000 or more into Illinois or have 200 or more transactions in Illinois are subject to the tax. I believe, as Max touched on very thoroughly, is starting in August 1st of 2026 through October 31st, 2026, there will be an amnesty program for remote retailers that sell into Illinois. The amnesty program would abate the penalty and interest for eligible liabilities. As Max said, the details are out on the website, and fiscal FY Bulletin 2026-2028 explains how to take advantage of the program. My final area is also touched on by Max, and that is the IFTA audits. IFTA stands for the International Fuel Tax Agreement. These audits are mandated by the federal government. The purpose is to ensure allocation of the motor fuel tax to the appropriate state based on mileage. If the returns are filed and subject to audit by the taxpayer in the base statement. The problems that we see that come before us arise from taxpayers and audits where they do not keep the records required to verify the miles traveled in specific destinations and keeping proper fuel receipts or withdrawals from a bulk tank to support the fuel used and tax paid. When proper records are not kept, the taxpayers' reported miles per gallon can be reduced by 20% or to 4 miles per gallon, and when proper fuel receipts are not maintained, claimed fuel tax will be disallowed. Many of the cases that I talked about in this area I brought up have one thing in common, and that is documentation. Taxpayers and their representatives should be aware that case law has determined that oral arguments without credible books and records will not rebut the department's reasonably based established liability. Case law such as A.R. Barnes versus Department of Revenue have consistently upheld the department's liabilities based on calculations whereby the taxpayer did not provide credible records. In contrast, case law also has sided with taxpayers who provided valid books and records when the department used an estimation such as the purchaser's markup to arrive at taxable sales. Lastly, I would like to emphasize what Africa spoke on, the necessity to bring up each issue you're disagreeing with, preferably in your ICB1 petition. When the formal conference board first began, the conferees were directed to review the entire audit. Proposed audit liabilities could be decreased or increased. Obviously, having your liability increased caused hesitation in coming to the informal conference board. The board's direction is now to address only those issues presented by the taxpayer. And please remember, the liability is usually consisting of not only tax, but penalty and interest. Although interest can only be addressed at the Board of Appeals, penalty abatement can be considered by the informal conference board under the reasonable cause guidelines. It is necessary to bring up these issues before the board, or they will not be considered, and once the action decision is rendered, the board has no jurisdiction over the proposed audit liability. This concludes my part of the informal conference board presentation, and you will now hear from my associate, Chad Estes, regarding income tax issues.
Thank you, Phil. Again, my name's Chad Estes. I'm an income tax conferee with the Informal Conference Board. I worked in the audit program area for about 27 years in various capacities and came to ICB about 3 years ago. Africa wanted me to briefly discuss some of the recurring issues that we're seeing on the income tax side in ICB. When it comes to corporate taxpayers, probably most prevalent issue or issues is in relation to throwback sales or throwout sales. And not to get too deep into those subject matters, but throwback sales are in relation to sales of TPP. Throwout sales is in relation to sales of service situations. Taxpayer must be able to demonstrate that they're taxable in the foreign jurisdiction, states, or foreign countries. Usually that's done through submitting to the auditor income tax filings for those jurisdictions, and also trying to demonstrate that they have a taxable presence in those jurisdictions. The mere filing of a return by itself is not enough to satisfy those rules, to avoid the throwback or throwout treatment for those activities. Usually the auditor will rely upon the income tax filings and property and payroll allocation records in those situations. There could be circumstances that go beyond property and payroll. In determining whether a taxpayer is taxable, as defined in Income Tax Section 303F. Currently, that analysis is done on a by-company basis within a unitary group. Starting with periods on or after 12/31/2025, we have switched to the Finnegan rule from the Joyce rule. With the Finnegan rule, I kind of foresee these issues kind of diminishing some, being once we get to those periods, the analysis will be on a group basis. So if one of the members can demonstrate their taxability in a given jurisdiction, all the members then will satisfy that rule. The one thing I tend to see in these situations, it seems these are a lot of older periods that, for whatever reason, it's taken a long time to get the audit liability proposed, and the corporate taxpayers will come to our venue and they will start to produce the documentation that's necessary to satisfy those rules and avoid the reversionary treatment or the throwout treatment. Just making sure the corporate taxpayers understand, like Phil just alluded to, we cannot do anything with interest due. Obviously, interest continues to accrue while they're in our jurisdiction and through the audit process, and kind of leaves my head scratching sometimes as to why the taxpayer doesn't provide those documents to the auditor sooner. But that is something we tend to see. The taxpayer is able to satisfy some of those jurisdictions, but the interest component is still there. One other thing just to be aware of, and this doesn't necessarily, it's not exclusive to throwback or throwout situations, but if you file a claim for refund, maybe you over-reported those items, you file a claim for refund. The Department and Audit's policy at this point is to process those claims and issue the refunds or credits, and then come back and audit those particular filings. So just because you've gotten your refund or received your refund Doesn't mean that, there could very well be audit activity subsequent to that. Another area that we tend to see, this is exclusive to partnerships, where again, this is a targeted issue. There's a modification exclusively for partnerships to try and put them on a level playing field with corporations, allowing them to take a modification and subtract income for services provided by partners or personal service income provided by partners. That is under section 203 D2H. We enacted a regulation in 2018 to try and assist with those situations. It looks, audit tries to work with taxpayers as much as they can in those situations. The reasonable compensation prong of the modification can be very subjective. There are nuances to the regulation to remember. The modifications for services rendered at the specific partnership level, not at higher tiers. You cannot claim the modification in a loss year, and the amount claimed cannot exceed the partner's individual distribution for the year. So if you have a client, or if your business claims that deduction or that subtraction modification, just try and be diligent in documenting how you arrived at your amounts, in case it is audited. We do get many abatement requests for penalty in these situations. I tend to feel if the taxpayer can demonstrate how the original amount was arrived at and the amount is not too exorbitant, the taxpayer should be in pretty good shape, to demonstrate that they exercise ordinary business care and prudence under our reasonable cause regulations. Another area we tend to see a lot of Schedule C audits on 1040 returns. I think someone in the audience asked about us auditing AGI. And there was a response that under 203E, we can make an adjustment. A lot of these Schedule C audits are referred from individual processing division. Similarly to what I was just talking about claims, sometimes individual processing division will letter out to the taxpayer on the original filing to ask for support for some of the Schedule C being reported. Sometimes they will go ahead and process the return and issue whatever refunds or credits that the taxpayer has claimed, and then refer them to audit. So beware of that as well. Sometimes we get some, usually with Schedule C's, it's self-prepared returns. We do see on the ICB ones, sometimes they will be claiming hardship and inability to pay, which again, as Africa alluded to, we cannot hear those particular cases. The Board of Appeals would be the venue in those situations. Those are currently the most prevalent items we get here in ICB as a result of the audit activity. And that concludes my discussion at this point. Thank you.